And also to invite Frederick and Dara back up, and we have a chance for some combined questions. So I'm going to move up here.
And I will move over.
So I do have a couple of questions left over from the first half of the session, but really on a combined basis, happy to take any questions. And there might be one at the back of the room. If you want to grab the mic, I'm happy to take a question. There's a mic there. But yeah, so I'm happy to pass to you if you've got a combined question. Take the mic so people online can hear.
Hello. Okay. So it's Alex here from Resolution Live. I am a valuation actuary. I'm not a product specialist. So I have a basic question around the annuity product feature. So when it comes to marketing an annuity product, one of the considerations policyholders, prospective policyholders could have is what happened if he or she died shortly after enough from the premium is paid. So I wonder whether there can be any product feature payback period in which if I died 2 years after my beloved one could actually get back some of the upfront premium, and would that in terms of obviously the drawback of that would be exchanging some of the profitability, but in terms of gaining scale for new product could there be any opportunity or any consideration or any learnings from other markets that we can leverage?
Absolutely. So, I mean, as I mentioned, with regard to the investment-linked annuity, which could surely be combined with the enhanced annuities, this can be done with different types of product features as well. For example, a death benefit or payback guaranteed, as you might call it, or a guarantee period, things like that. We need to keep in mind that as soon as we start adding these features, the enhancement that you get will surely drop. Because, I mean, it's most obvious when we're talking of guarantee periods, so you're guaranteed to get your annuity for 20 years, then you basically override your TPXs for the first 20 years with ones when pricing the annuity. So, yeah, parts of the enhancement will simply go away. So that's a balance that you need to find. Well, having worked closely in the UK market, I think it's good to leave the customers with a choice here to find their right balance between a substantial enhancement on the one end of the spectrum and long guarantee on the other end.
Thank you. Yep. Please introduce yourself.
Thanks. I have another question regarding carbon footprint. This is Gustavo Cabrera from Suramericana, Colombia. How powerful do you think it is to find a way of linking the carbon footprint measurement with carbon markets in regards of democratizing the access of carbon markets for individuals for being rewarded after changing their habits and reducing their carbon footprint, for example? And this goes beyond life insurance. It entails motor insurance, for example, health.
You want to go?
I don't know enough about the carbon market, but I would think that it could be a great connection indeed. Yeah, it's a tangible value that you can offer and sell. I mean, it's
box for individuals to
Yep.
generate a big box for individuals to contribute to those carbon credits to access and link the voluntary and the regulatory markets in the markets when it's been developed.
Indeed.
You've given us an idea.
I've got a great question here. Would you consider a fair enhanced annuity as a good addition to address the social in ESG?
Address the social?
The social aspect.
I think so. One of the topics we covered there is by going to a fully enhanced annuity, fully underwritten annuity, you start to bring in a lot more people into the pool of potential purchasers. So at the minute we've got much smaller because they're designed for healthier people, but in the spirit of kind of providing a service for the community, these type of products can service a much bigger portion of the community than the current ones can.
How would green annuities work? Should I take up smoking?
Probably not.
Yeah, how would green annuities work?
I think a big part of it is the underlying investment.
Yep.
So I think the biggest part is that this is invested in ESG friendly funds, things like that. So that'd be the biggest part, I would say, because there's so many money within the retirement savings and then also annuity payout space that that's the biggest part for sure.
So with ESG rating, could you consider it as another form of indirect discrimination, because the virtuous middle class can afford it, and perhaps it's just harder on the rest of the people?
So I still think there's an assumption there that ESG is more expensive. I think that's the underlying assumption in that question, and I would try to challenge that, because I think ESG, if done right, it should save us money, it should make us more efficient, it should make us a better organisation. So I think it then it expands who can get access to financial protection.
Okay. So if you provide insurance for workers in coal mining, for example, is this bad ESG?
I'll talk. We had the debate within RGA, and it went through all of our organisation as to where is our responsibility in this, because it is a challenge. In the end, our purpose statement, you'll see it around the place, is we provide financial protection for all. So we are here to provide financial protection to those individuals. We do understand it's a challenge, but the people who are currently working in that environment, they deserve financial protection as well. And we know that they're going to be exposed to all sorts of transition risks and other things. Taking away from those individuals financial protection just was a string too far for RGA.
I don't know Hanover's official position on this, so but personally, I think it makes perfect sense what Alissa says. You're protecting the individual. Why should they suffer? Just depending on the industry they're working on. But that's my own personal view. Because Hanover has gone completely the opposite way.
And I think just to wrap up with, have one question around ethics. So have you thought about the ethical implications of people taking up certain lifestyle choices just to get a different enhanced annuity outcome?
Yeah, I don't think we've seen that, so that the UK is the biggest market. I don't think people will start overeating, getting diabetes, smoking to get an increase in their annuity.
Temporarily.
Potentially that might happen in Australia. We would have to keep a close eye on things.
Yeah. Well, on that note, I'd like you all to join with me in thanking our speakers for today. And now there is an opportunity, if you'd like to stay in the room for some networking here or go down for an early afternoon tea, you're most welcome to as well. But thank you all for joining us.
Cigarette break.